Good morning, folks, and welcome to another one of my videos. I hope you had a great weekend, by the way, and you're refreshed and ready for the week ahead. So I have four pairs on watch today. Those are pound Kiwi, euro Kiwi, Kiwi dollar, and euro pound. It is a bank holiday in the UK at the moment, so I'm kind of not necessarily anticipating these pound and euro pairs to shape up so much, but far be it for us to try and dictate or predict what the market will do. We just have to show up and do what we do on a consistent basis and then let the market show its hand as and when it does. So why am I looking at pound Kiwi? I am looking at pound Kiwi because we have this standout liquidity point here, and we reach this area in a very, very non-progressive manner. We get this 1, 2, 3 touch structure, which then goes into an ending structure. I've just cut through this wick because, as you can see, it doesn't really make sense in terms of this overall structure. So this just looks like a big volatility wick to me. But we reach this area of value in a very non-progressive manner, and then we go into what I've talked about before, what we call an ending structure. So we get a 1, 2, 3 touch move leading up to the area of value, where the second touch more often than not doesn't actually reach the area of value, and then it moves sideways. Then we get the third touch, and sometimes what we see, and often what we see, is this break above, because you've got to remember that many of the retail traders will be paying attention to this, and they will be looking at what was previously resistance becoming support once it's broken above. And a lot of the broker platforms will be putting out messages in their little news feed. I remember this from when I first started trading and when I used to trade through the broker. I do it all through TradingView now, but I remember these little news feeds that they would say West Texas oil at all-time low or all-time high. And what they're essentially trying to do is they're trying to encourage FOMO. They're trying to encourage you to buy the highs and sell the lows, which is what a lot of the retail traders actually do. So many of these platforms and trading news services would have put out messages saying pound Kiwi at, where are we, 3-year high. And a lot of people would have seen this and thought, I'm missing out. So they start buying the highs. And what we often see is when price has reached an area of value such as this, and it's done so in a non-progressive manner, in a very, very structural, non-impulsive way, and then we have had an ending structure going into it, what we typically see once price breaks above is more often than not it will come crashing down. Okay, which is why I've got as a first target my arrow pointing to what we call the 90% rule, the start of this piece of structure. I could have had it all the way down to here, but just being a little bit more realistic, I've just put it down to the start of this structure, the base, where we typically see larger corrections form. So knowing what we know and knowing that price is broken above and that this is likely more likely people getting themselves caught the wrong side of the market, the next thing I asked myself, and we just look at this, we have this, just to touch on it, we have this weekly retrace, a weekly candle which retraces at least 50% of the previous candle. Before I draw down, the next thing I ask myself is, have the bigger players, or are the bigger players stepping in? So you can see we've these trend lines here, this is what we call pattern separation. And what I'm trying to do, if I just draw down a little bit further, I'm trying to determine where one structure begins and where another one ends. And if we just draw down to the 15-minute ever so quickly, you can see that we have the impulse, correction, impulse, slightly smaller correction into a larger correction. Then we get this, if I go to the 5-minute chart, we get, after this larger correction, we get the smaller correction into a larger correction. Okay, so there's a very, very nice sequence, which suggests to me, you've got to remember, these tight corrections are typically just the big institutions stacking their orders before the next move. You've got to remember that the big institutions, given how large the accounts they're trading, they can't just do what we're doing. They can't just hope to get in, lump all their orders in at a particular price and then hope that they all get filled, because they're trading massive amounts. Okay, so what they do is they stack the orders at different prices, and then which creates a kind of domino effect. So that's why when we see these orders being stacked like this, it's no surprise to me that price drops out. We go into another tight correction, then into a slightly larger one. And we have this 1, 2, 3, more of a running channel to it, but then we push down. We have that little tighter correction in there. And then we go into the larger correction. This is a good sequence. So with that in mind, what are we looking for? Is the following. As I say, this has got all the this has got all the makings of bank holiday price action, where we just trickle sideways for an extra 24 hours because of it being a bank holiday here in the UK. But we're not fortune tellers. We don't know what the market participants are going to do. This is just what I've observed from experience. Market bank holiday price action tends to just go sideways for an additional 24 hours. But just in case it doesn't, what are we looking for? If we push up to this area of value here, and we do so, we've got this very intentional price action, this 1, 2, potential 3 touch move. And when we see these just before an area leading up to an area of value, that's a good indication as well. A 1, 2, 3, that this 1, 2, 3 move is potentially completed within this potential 1, 2, 3 touch continuation move. So if we push up to this area of value, then I'll be looking to get short, so long as it doesn't do very, very impulsively, which overall it hasn't so far. Then I'll be looking to get short with a risk entry either after a phase line break on either the 1 hour or the 15-minute chart. If there was a phase line there, then it would likely be the case that we would have some kind of small 1 hour structure, which would give me permission to look for entries on the 15-minute chart. This is currently a 4 hour structure. I can see the structure on the 4 hour chart. So if we didn't get the phase line break, then I will be looking for 1 minute rejections, 1 hour rejections from this area of value. So if we just pushed up to this area and it wasn't too impulsive, then I will be looking for 1 hour rejections, unless we get that little phase line, which I could filter and identify the structure of on the 15-minute chart. Okay, hopefully that's clear. If we just blast to the upside, if we break, and if we did that, we would likely break just above. And if it was very impulsive, then I would look for the push down followed by the flag, and then I would look to get short within or on the break of the flag, and I would easily be able to manage either of these positions for something in the region of 6% down to this low, just in case price came back up again. But that's what I'm going to be looking for. I have an alert set in this area just below that area of value. If it's not triggered, then I will not be looking to place a trade. So Euro Kiwi, the computer has just frozen up a second. Let's just hope that unfreezes itself. Right, there we go. So this is what I was anticipating, right? So similar thing on Euro Kiwi. I'm going to speed up ever so slightly just because of the time constraints on these videos, but we have a 1, 2, 3 which taps into this area of value. We then push down, so there's no reason now, because this is a completed structure, for price to return to this area. We then have a price pushes down, the correction gets very wide, meaning that it becomes more neutral and less likely to continue to the downside. And sure enough, we push up to this area, we have that near miss again. You could plot trend lines on here, but just for simplistic reasons, I've taken them off. We have that 1, 2, 3 second touch falls just shy. We push down, and then price finds its way back up to the area because there was likely still liquidity in that area. So if I just drill down, you can see once again we've had the same thing again. We have this 1, 2, 3 touch. We tap into this area, and you can see that once we broke above, price moved up very, very correctively. Okay, so we're always ascertaining or trying to ascertain the nature of the market. So if price moves in a direction correctively, then the next likely move is an impulse in the opposite direction. So this is a prime example of what I was saying, that when price breaks above a standout area of value and it comes back down, many people think this is a retest to go long. The brokers would have put out their messages again saying Euro Kiwi at 3-year high. That would have encouraged FOMO. It would have encouraged people to start buying. And then we see this corrective, non-progressive move to the upside, and then price comes crashing down once again. Okay, so once again, the next thing I'm doing is I'm identifying the sequence, and you can see We have an impulse down followed by a tight flag into a slightly larger one, into a slightly tighter one, into a slightly larger one. This is a very solid looking sequence, and then we get the larger flags again. We typically see these once we hit the 90% rule. So once we hit the start of a piece of structure such as this, it's no surprise that we then get larger corrections more often than not. Now, when I saw this pair last night, you can see in this instance we have this little hook point with this sharp move up followed by a sharp move out down, giving me a clue that there's likely liquidity in that area. And one of the clues is that it was likely still there. Is that we have this 1-2 second touch which falls just shy of this area. We come back up, we kind of narrowly near miss it again. And one of the clues for me that we would likely find our way back up there is because price was squeezing. Okay, so when we got trend lines which are getting closer together like this, what I've typically seen, and I noticed this quite early on in my trading, is that what will typically happen is price will push down, break the trend line ever so slightly, and then push up, and then we have a slightly more parallel channel. So when I did my forecast, I was anticipating this, and that's exactly what has happened. So what will I be looking for today? I will be looking for the following. In this instance, I will be looking for a push up to this area of value and a push back down followed by a flag, and then I will look to get short either within or on the break of the flag. And one of the reasons for that is because I'm not too concerned about this, but we have an area of consolidation sat just above. So if price taps into this area, then you're more likely to be, if you try and call the tops, if you try and get in this area, you're more likely to be tagged in and tagged out, and price finds its way up to the next little inflection point where there is an exchange of liquidity, as opposed to on pound Kiwi where there is nothing set above. So that structure that I showed you, there was nothing on pound Kiwi, there was nothing set above, so there's no reason for price to trickle a little bit higher. The other reason is that price is still squeezing ever so slightly within this range, because you can see, the trend lines are not quite parallel, so it is squeezing ever so slightly. And why that's significant is because if we measure the impulse here, and we assume that the after a correction, so when we get the impulse correction continuation, the continuation leg can be of a similar length. I don't think we'd be going that high, but we could be trickling a little bit higher into that region for that reason, because we have this impulse correction continuation where this leg here may be of a similar length to this. So that's another reason why we might trickle a little bit higher. So I've got an alert set just below that area of value once again, and if that isn't triggered, then I will not be looking for this entry. Okay, I did have this entry there because when price was squeezing a bit more, but we can move that down to there now. I'll be able to manage that for something in the region of 3 to 4% down to that low, depending on the size of this flag, if we even get it. So that is Euro Kiwi. I'm going to speed up ever so slightly. So Kiwi dollar, nice simple one. We have a near miss. Price will often gravitate back towards an area of value if price has got close to it, but it hasn't quite tapped it. And you can see that's the case here. So that's a positive confluence factor. We do have another one up here, but you can see we're most definitely in a run of continuation. And when I show you these corrections, you'll understand that the bigger players have clearly stepped in, and also we've corrected below this low, giving me a clue that there was not enough liquidity here to send price all the way up to the upside to fill this near miss here, which means that we're likely going to take out this low before we actually push up to this area, if indeed we actually do. So if I just drill down, you can see the tight corrections. It's a good sequence: tight correction, tight correction into a slightly larger one, tighter one, larger one, tighter one, larger one. And now we've got this larger correction, which is no surprise to me because we're at the start or just below this structure. It's no surprise to me that we're now getting a tight correction. So what am I going to be looking for? One of the things that stands out straight away is that this correction is very wide relative to this move down. Okay, so we have to be a little bit more careful. We also have, once again, that tight consolidation sat just above all of this, making a risk entry within this area slightly more likely. We have potentially an expanding pattern. We've tapped below here, likely triggered a lot of the stop losses and limit orders that were down there, which may send this quite aggressively to the upside. Again, this may not be ready to till the end of the day, but the fact that we've tapped out a lot of the orders that were sat there may cause this to move very aggressively up to this area. And if we do push up to that area, then what I will be looking for once again, as I say, because this is very wide relative to the move down, these corrections can become more neutral and push to the upside, especially when we have a little tight consolidation where there was an exchange of liquidity last time around. So for that reason, if we tap into this area of value, I will be looking for a push down followed by a flag, and then I'll be looking to get short either within or on the break of the flag, and I should be able to manage that down to these lows for something in the region of 6%. So that is Kiwi dollar. Last up with just under 5 minutes to go is, excuse me, euro pound. So euro pound on the not so concerned about this so much, but we're just zooming in because euro pound can be quite messy. But we have tapped into this area. Okay, you can see this. Can you see this on the? You can see that we've tapped into this area. And you'll see by way of a 1, 2, 3 touch structure, we have that weekly retrace candle, which retraces 50% of the previous candle. How did we get to that area? We got there by way of a 1, 2, 3 wave move, giving me a clue that this 1, 2, 3 wave move has completed. We tap into that area, and you can see we're pushing to the upside. So then I'll be looking to target the 90% rule to the start of this piece of structure here, which is why I've got the ray line there. And if we just zoom down, you can see this is clearly impulsive momentum. There's nothing corrective about this, particularly for a pound such as euro pound, which moves in a typically corrective manner. So if I just drill down, just looking at the sequences, there is on the 5-minute chart a little tight consolidation in there. We then move into this slightly larger tight consolidation. Again, this is me just pattern separating. So we have the tight consolidation into a slightly larger one, into a slightly tighter one. And then we have this intentional footprint here where the price comes down quite aggressively, pushes up. So there's likely a lot of orders in there. But because we kind of have this correction here, and price could push a little bit lower down to kind of this one or this one, and because if we came down to this area, we would technically be trading below this low and below this low as well. What are we looking for from this pair today is the following. I will be looking for price to break this area of value, tap out all the orders there, and then I'll be looking for the push up followed by the tight flag to confirm to me the consolidation afterwards is what we use to confirm that price isn't going to suddenly retrace. So that the correction would be the confirmation for me that price isn't going to then suddenly tap into these areas. Of course, it could still do that. And we could also get, just to touch on it, which I think is likely, this. We could get something like this where we kind of near miss that area there. We could get something like this in particular because of the bank holiday price action. Price has a habit of going sideways, and if you look at the time at the bottom of the screen, if that was to happen, we would be down this area by about 9 a.m. Or 8 a.m. on Tuesday, which is when the London session reconvenes. So it wouldn't surprise me if we just correct sideways, and then early Tuesday, early London session, then we get this forecasted move. And I would actually prefer that because the longer this consolidates, if you think of a consolidation like a bow and arrow, and the bow on the arrow being pulled back, the moves in the other direction, the more the bow is pulled back, tend to be more aggressive, if that makes sense. So we'll see what happens with this. I've got an alert set there just above this area of value. If that is not triggered, then no trade for me. Hope you've enjoyed this video, folks. I hope you've learned something from it, and I will be back tomorrow, most likely, with another one of these videos. Given what the market's looking like at the moment, it's looking pretty good. Entries look to be aplenty at the moment. But for now, have a great day, and I will speak to you again soon. Thanks for watching.